Hello, welcome to European Open briefing for Friday, October 26th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The risk of sentiment is back this morning. Yesterday, we saw a bit of a rebound in Europe, and later in the US session, there was a sharp rebound on Wall Street. However, after the closing bell in the US, we had some disappointing earnings results. So in Asia, we're seeing a much weaker start, and we're seeing safe havens in demand again, particularly the Japanese yen is on the rise once more. We can see the dollar index though also holding near its highs from yesterday, where it touched a 2-month high. It's currently trading slightly lower at 96.59 dollar yen, just above the 112 level. So markets are worried about the global growth outlook, and particularly in China, there's fears of a Chinese slowdown, and we saw the Chinese yuan touching a 10-year low this morning against the US dollar. That put downwards pressure on the Aussie and the Kiwi. The Aussie down by 0.6% at 0.7035 at the moment. The Kiwi down by 0.8% at 0.6470 versus the US dollar. The loonie is also down sharply, erasing its gains made after the BOC rate hike earlier in the week. We're seeing weaker oil prices weighing on the Canadian currency. So despite some warnings from Saudi Arabia about a possible oversupply, oil prices are down on the back of that risk of sentiment. WTI currently trading down by more than 1% at $66.59 a barrel. Gold gaining slightly on the back of that risk of mood. If you look at European currencies, the euro has fallen below the 1.14 level against the US dollar. We had the ECB meeting yesterday, and Mario Draghi failed to convince markets that the Eurozone economy was strong enough for the ECB to press ahead with its normalization plans. Sterling did fall below 1.28. It's now bounced back above that level, at currently trading at 1.2810. Though there are some new Brexit concerns, as being reported that the UK government has paused Brexit negotiations as the cabinet is unable to decide on a way forward over that Brexit impasse with the Northern Irish border issue. So that is weighing on sterling at the moment. If you look at the main performance, USD CAD, the biggest gainer this morning, followed by gold. And at the bottom of the table, we've got the Aussie, the Kiwi, and oil prices. Taking a look at the dollar index more closely, we can see earlier it made a 2-month high of 96.73, mainly on the back of a further slide in the euro, which is has the biggest weighting in the dollar index. Dollar yen has been fairly range bound in recent days, around 112.25. There's been some downside pressure on the dollar yen pair as the yen has been in demand due to its status as a safe haven currency. Plus, we're seeing treasury yields declining on the back of stronger demand for US government bonds once again due to risk of sentiment, and sell-off on Wall Street has also been somewhat weighing on dollar yen. So dollar yen there does have considerable downside pressure, but weakness in other currencies has been supporting the dollar. But we could see, despite a rebound on Wall Street, we could see another decline later today when US trading resumes. After hours, we saw tech giants Amazon and Alphabet reporting disappointing earnings, and they fell sharply in after hours trading. So US stock futures are pointing to a sharply lower market for Friday. Looking at the euro now, we can see the euro doesn't seem nowhere near at ending its downslide. It's now fallen to way below the 1.14 level, approaching those lows in mid-August when it slightly fell below the 1.13 handle. So Mario Draghi yesterday reiterated the bank's policy to end QE at the end of December and to start raising interest rates after the summer of 2019, but markets were unconvinced by his reassurances, and Draghi also commented that monetary union remains fragile, so that also upset the markets. We saw the euro falling sharply after that remark, and we have another potential risk later today when S&P will review Italy's sovereign debt rating, and they're expected to change the outlook to negative. If we do see something worse than that, such as an actual ratings downgrade as early as today, that would certainly raise Italian government bond yields, widening the yield with German bonds, and that would further weigh on the single currency. So the outlook is looking rather grim for the Eurozone. We had weak PMIs and other weak data in recent days, so there doesn't seem to be much positive news surrounding the euro at the moment. And a quick look at the Australian dollar, we can see it's now broken below that earlier key support of 0.7040. That was the lows from early in October, and the Aussie had been fairly resilient in recent days despite that market turmoil, but now the fall in the Chinese yuan to 10-year lows proved too much for the Aussie, and it's now fallen to a fresh low touching 32.5 months trough of 0.7021 against the US dollar. The yuan hit 6.9642 per dollar after the People's Bank of China set a midpoint above the key 6.95 level, suggesting that the People's Bank of China supports a gradual depreciation of the Chinese currency. Plus, on top of that, of course, we've got all those ongoing concerns about trade tensions, possible Chinese economic slowdown, geopolitical tensions, and now we also have that weakening corporate earnings outlook in the US weighing on market sentiment. Having a look at what's coming up later today, the main focus will be on US GDP data for the third quarter, the first look, and then we're also going to have a speech by Mario Draghi. That's it for me. Thank you very much for watching and have a great day.